Hello, let's start assets today. This has been a session we were planning long time. Now, asset module in ERP next is kind of a complete module. It's fit for all. It can be without any much customization. You can use it anywhere. I'll explain the concept one by one, but uh, going through, we will just start with asset, then asset category, movements, and many of these functions, and how it's affecting how it's going to affect the accounting. That's also we will cover today. Let's see. So I'll just start with asset. I'll just try to add an asset. So that is, let's say, okay. Now the first thing, so you can add assets through item directly on asset or through item code. So item code, when you are going doing it through item code, so I mean, first you create item, then through item you can create an asset or directly an asset. So first I will do directly an asset, then we will go through the the other method, because the other method contain something that we need to, something like is fixed assets. Once you have it, we need to define here asset category, and there is something called auto create and create groups. I'll come back to that. First, let's do it here through new asset. So here I am just adding a car, that is Ford Explorer. Okay, that's my car. So I'll just add it here. Also, okay, if it's not there, it will ask you to add it an item, because without an item there is no asset. There has to be an item for an asset. Okay, so I'll just put it here, which group, any group. So I'll just put it here. And asset, you cannot put maintain stock. It is a strict no, you cannot have it. So you remove maintain stock. And is it fixed assets? Yes, it's fixed assets. So here we will come to the category thing. Category is the one of the most important thing that you need to take care of when we are doing assets. So I'll just add a category here. So what is the category? So there is already, we have vehicle, so I will put it here, transportation. I'll put okay. I'll come back to here later. Enable capital work. This one. Okay. So that is one point that we must note. So we have to come back and check it. Okay. On a later stage. So what is finance book? The finance book, of course, it is for separating the account and having multiple style of depreciation for different purposes. It's like calculating actual depreciation, or some straight line, or changing the depreciation method for different kind of accounting practices. So we'll stick with straight line today, because that's the most common used. The other things we can discuss later. So the finance book, I have a finance book one. I will just keep that finance book, and I will put straight line for this. A total number of depreciation. So how many depreciation that you need to mention here. Like, if you want to end the depreciation in 5 years, you will put it to five years, or 4 years, or whatever. And frequency of depreciation, that is in months. So if you need every year there is a depreciation, you need to put it 12. Or so always, don't put it one. If it's yearly, you need to put it 12, because it it's taking monthly. Okay. And depreciation posting date. So which date every year? I mean, it's not one time. Every year, which day you want to uh, post depreciation? Let's say I'll put it every September 1. Every September 1, I'll put depreciation for this particular category. You can change it on each asset, that we will discuss later. uh, that you can see when we are creating item where to change. And there are accounts. So this account, how it will affect, I will explain you. First, this is okay. So there is, I'll take the chart of account, chart of accounts. Okay. So on the application of funds, fixed assets, this is fixed assets. You will have your own structure. So I'll just, this is my structure for testing. This is the standard one for testing. You can have your own. So there are, you can see all the capital, electronic furniture, office equipment, etc. So I'll just add it here. One more, that is transportation. This account I will use for the cars and everything. Then the account number I will give 1791. Is group? No, it's not group. Then it is what? Fixed assets. Okay, fixed assets and the currency and everything same. So I'll just create it. Okay, so here you can see a transportation account and the transaction on it's 0. Now I'll go back to here and put here transportation. Okay, so any transportation when we are creating, it will come here. And the accumulated depreciation, you can see it one here, accumulated depreciation. How this will work, I'll explain while we are doing our first depreciation. So here it is accumulated depreciation and depreciation expense accounts. So as a concept, depreciation is an expense. You bought a car, every year there is a depreciation for that car. That means it's an expense, but indirect expense. Okay, because depreciation is not direct. Direct expense is like you are buying pen, petrol, and that kind of things. That is a direct expense. So this one is indirect expense. Okay, so on the indirect expense, we will have asset there is a gain and loss, asset disposal, and everything is there. But one thing that we need to see it here, depreciation account 5203. You can have your own. So this is 5203, the depreciation that we are putting here. So how it will come? Let me brief you. So there is a if there is a depreciation happening, this from this account it will come to this account. So basically, so what will happen from the account depreciation, this amount will come to this amount. So what will happen, this asset will be as from asset it will go to expense. So your asset will be down and it will go to the profit and loss account, profit and loss account. Okay, so well, so this is uh, again one thing I'll tell you on this. On the fixed assets, on the fixed assets, whenever we buy, let's say you bought a car of 50,000, then it will go to the fixed assets. Then when it's depreciating, it will go from accumulated depreciation to the expense account. So basically what will happen, I'll show that later, but basically what will happen, what you have it here on the fixed assets, your where is it, your transportation account, it will remain the same 50,000 up to the 5 years, up to 5 years. But the same time it will be depreciated from accumulated depreciation, and it will go to here. So if you take the total of fixed assets, like here on the total of fixed assets, it will be down because it's depreciation on this account, even though it is stay same on this account, but on the expense side it will be added. So your profit will be down and your fixed assets will be down. I mean, profit will be down because your expense is added. Uh, Fixed assets will be down. Okay, even though even though this account will remain same, but it will go from this also. I'll show you that when I come back after creating it. And there is capital work in progress account. I will explain you like that later in this stage. Okay, so I'm just adding transportation here. It took little bit long time for that because category is the one of the most important thing. So I will put it here, Ford Explorer again, because when I was creating, I missed that. Create new item, Ford Explorer. Item group can be, normally I put it in assets, so it's just fixed assets. Uh, okay, so maintain stock, no. Fixed assets, yes. And put it here, transportation, and save it. Okay, right. So location, you need to give a location, any location. So it can be a garage or something. I'll just put it. So here, one thing that we must notice here, there is a field here called is existing asset. Okay, there is another one here that also I need to explain. I'll explain in this session. So here is existing asset means asset is already there, the car is already there, but you, for some reason that you are entering now, maybe because you start ERP next implementation now, so you need to add it, like, so you will take all from there and put it here, so you can put it. So if you are putting existing asset, then you don't need to mention purchase receipts. You can, but it's not mandatory. But if it's not a new existing new no, if it's a new one, not an existing one, what will happen? You need to buy it, right? So at that time there will be a purchase receipts or the purchase invoice, etc. So you need to give it mandatory. So right now I am making an existing asset, and gross purchasing amount I am putting it 50,000. Okay. So there are two fields you can see here. One is available for use, and one is purchased it. So you can purchase something, keep it there, and use it sometime later. Or if it's a new implementation, purchase date may be old, and purchase may date be very old, and you will add it here. Okay. So what I will do, I'll just put a purchase date little bit earlier on July, and I'll put no, sorry, purchase date little earlier June, and available for use today. Okay. So then I'll put little bit early because I can make a depreciation if you want. Just put it like this. So there is something called calculate depreciation. Calculate, there is an opening accumulation because accumulate depreciation, because maybe if you are moving from other system to ERP next, and if you take a calculation of all depreciations, so you need to enter it. Okay, so you need to put the old depreciation here. Right now I'm not putting it, but in case that you are moving from other, you can put it here. And opening number of book depreciation, for example, you have 5 depreciation, like 5 years, then you already completed 2 years, then you can put 2 here. Okay. Or if it says fully depreciation, you just want to keep it for selling in future or something, you can just put fully depreciation. Okay. So this one, it comes automatically here, finance book. Why? Because on the category we already set it here, set everything, we already set it, that's why it's coming. But if you want to change it, you can change it. I'm not changing it. And there is one very important thing, you can see it here. Once you go edit, there is something called salvage value and expected value after useful life. This, in most cases what happens, they need to define, for example, a car after fully depreciation, 5 years, after 5 years you may want to set it like 10,000 still available there. So depreciation will be happening only for the remaining amount, only for the remaining amount. So this some company practice that, but most of them don't. Most of So it is depends on the company policy and the accounting policy. etc. So uh, just keep this in mind. If you are defining a salvage value, it will be there. Okay, so if there is, let's say, value is 50,000, 50,000, and salvage value is 10,000, so there will be only depreciation, total depreciation, that will be 40,000. Okay, so this is, just keep in mind. If your company has a policy to keep a salvage value for each asset, you can just keep it there. Okay, so that is one thing. And if you have insurance policy number, etc., you can just fill it here. It doesn't affect accounting directly. You need to enter separate journal for payment of insurance, but it is there, so you can, like, you need to take a report of something, you can just take that report. And maintenance, I will come back to here how to do maintenance. And this is, so now, right now, what I'm doing, I'm just saving it. Okay, so what you can see here, asset depreciation schedule created, you can see that. And if you go there, or you can go directly from here, you can see that here, because if you miss that click, it's there. So it will be here. So this is the depreciation. So depreciation will be like, this is the depreciation module. At the end of depreciation, all amount will be depreciated. I told you, if you need a salvage value, you need to put it there. I show you there. So here, why it is coming 874, because this is not full year depreciation. um, so it's just, then it will, the next year, from there on, the depreciation will be 10,000, and at the end, the last year, it will be like this, and the total will be 50,000, and the depreciation will be there. Okay, so what I can do now, I can make a depreciation. Oh, the date, if, okay, just let me submit this. Let me submit this in asset. Okay, and depreciation, I'll go to the depreciation schedule, and I can make a depreciation entry here. uh, you can see this button here, but you cannot see that same button here. You see, that what it's because here the date already completed, it's to 2024 9 September, we are already in September. 2025, it's not already reached, so you cannot see it here, but you can see it here, the depreciation. Okay, before going to depreciation, let me check the chart of account. Let me check okay, so the transport. Okay, so we, in this case, why it's not coming in the transportation, there is a reason, because we moved from old system to new system, and we haven't made one sales invoice, or no, purchase invoice or purchase receipt for this particular transaction. So if it's a new item, if we have made a purchase invoice at the time of creation of asset, that amount will come here. But if you are moving, if it's an existing asset, you need to manually enter it here. Manually means you need to enter it through a journal or an import, so that value will come here. Okay, that, keep that in mind. I will show you how to create a non-existing asset, and the value will come here. Okay, and now the accumulated depreciation, I have done it for another session, but check this amount, 1468. But I will make a depreciation here now. I'll make a depreciation here. Okay, so I made a depreciation. So that depreciation, you can see it here, the journal entry here. You can see the journal entry of that depreciation. I'll just go here. You can see that journal entry. What happens? This is accumulated depreciation is on credit, and uh, accumulated depreciation, and the depreciation is on debit. So actually what is happening, from the accumulated depreciation the value is going to from asset it is going to expense. I'll show it here. 874. I need to refresh it. Fixed assets. So you can see accumulated depreciation, it is up. Depreciation, and so here on the expense side, indirect expense, that amount will come here. That amount will come here on 5203 on this one. That amount will add here. Actually, you need to put finance book here to see the transaction. Okay, 874.32, right? Yeah, 874.32 here. This is the depreciation that you can see here. There are other transactions, that is why you don't see the correct amount there in the chart of account, but you can see it here. So when remember this, you need to put finance book here to see the transaction, otherwise you will not see it. Because if you put it in a finance transaction and you just put general, you will not see it here. So just keep that in mind when you're checking the general ledger that is happening against depreciation. Okay, so this is here, same here on the fixed assets, on the accumulated depreciation. If you go to the ledger, you go to ledger, here you don't see it anything. So but when you are selecting finance book, you will see there is an 874 on the depreciation. Okay, so keep that in mind to select this finance book. Okay. Okay. Now let's go to create a non-existing asset. So I'll just go there on the same screen, assets, and I'll try to create one. It's that was Ford Explorer. I will put something like Toyota Corolla. No, Toyota. Something I don't. I don't. Nissan Patrol. Okay, I'm just copying it. Need to create an item. Okay. So there is another way to create it. I'll create that way. I'll do that again. So I'll just put it here because there are multiple ways to create an account. So I'll do the other thing next stage. So it's no maintenance stock, fixed assets, and again that is what was our transportation. I put save again. Now, is it an existing account asset? No, we done it before, and because of that, we didn't see it on the chart of account because you need to add it manually. I told you before. I'm just reminding you. Now I'm doing it an action. Okay. So this is it a composite asset? I will come back there. So location, you put anything, and this one purchase receipt. Purchase receipt. You need to have a purchase receipt. Why? Because it's a new item. It's not an existing item. So I'll just add a purchase receipt. I'll put a supplier, any supplier. Then I'll put Nissan Patrol. Okay, and the price is 25,000. 25,000. That's it. Now I'll just, this is a purchase receipt. Actually, it can be through purchase invoice also. This is, I just put a purchase receipt, and it came back to the same screen. So it is here, you can see the purchase receipt number. Okay, and available for use date, they put same date. I also put them. So you can put a future date, because if you are keeping it in the store and using it late. So the calculate depreciation, everything is same. I am not changing anything. Then insurance details, maintenance required, I'll come back. So, or I'll just put maintenance required in case that because I don't need to create another session for that. Okay. Next depreciation cannot be before purchase date. Okay, so I'll just put it next purchase. Okay, I'll put it today itself. Okay, now there is a depreciation schedule is there, same like before, and I submit this. When I submit this, I'll go back to chart of account. I hope it will be there. So here on the fixed assets, you can see on the, maybe I didn't, okay, I didn't create an invoice for that. I'll just, so what I will do, I will do to asset. There is a link for journal entry, asset maintenance. I will put purchase receipt. Purchase receipt. So on the purchase receipt, this is the purchase receipt. I'll just post it. I'll just post this purchase receipt because otherwise there is no impact. So again, I come back to here on the assets, on the fixed assets. So finally, we have it here on the, here on the 25,000. Okay, so this is just come as a, because it's a new asset, we have it here on the purchase receipt or purchase invoice. It will come here. Okay, so our it's added, our asset value has been added, so you can see it on the asset value. And if you want to see it here itself, you can see on, go to view. Okay, and you can see stock ledger. This is added, maybe this is not a stock thing, and there is an accounting ledger. You can see it here, 25,000 has come here. On the asset receivable and the transportation, it's there in the transportation on the debit side, and the asset receivable on the, because it's like stock receivable, there is something called asset receivable, that's on the stock side. So you can see it here, 25,000 has been debited on the transportation cycle. So when you are doing it here, okay, so now you have an asset here. So on that asset, I will just, what I will do on this, I'll go to depreciation schedule. I think it's today, depreciation schedule, and there is, because it's just for 1 day depreciation, you can see it here. You purchased just on today itself, so it's just a 1 day depreciation. So I'll try to make a depreciation here. Okay, I made a depreciation, so that depreciation will be posted here on this journal. You can see this journal. Okay, that depreciation actually, it's from accumulated depreciation asset to this one. So what happens here, on the, here on the fixed assets, you can see here transportation, it still remains same, 25,000. You must be wondering why it is happening, because I told you before, from the accumulated depreciation it is going to expenses, not from here. If you want to zero out here, you need to scrap the asset. That's a conceptual thing. Okay, so it will go from here to expense, not from here to expense. So keep that in mind, a very important concept. Okay, so here if you go to transportation and view ledger, you don't see anything other than this 25,000. But if you go to here application on the fixed assets, what you will see on the accumulated depreciation, you will see that amount. You need to select finance book, because I told you to. Okay, so here you can see that 13.660 and accumulated depreciation, it's credited from here. So that is very important concept. Just keep that in mind. So from which account to which account it's actually going. So that is one thing. You remember one thing I have done here. It's not related particularly about that, but I have put this maintenance required. So if it's maintenance required, it's just a data thing, not about accounting. So you can see here, you can see it here, what uh, maintenance. There is a maintenance team. Maintenance maintenance team. So you can have a maintenance team for an asset, especially because if you have a building and all, you can have a maintenance team. So you just all the members of that team. I'm not explaining that because it's just a data thing. I told you. You want to create a record of maintenance, okay, and just and the maintenance schedule, etc., etc. Maintenance list. So on the asset maintenance list you will see, so when you want, so this is like cleaning, so it's planned monthly cleaning, so next due date, so you can take a report, you you can take a report saying, okay, uh, you- every which date that your car is going to be cleaned or going for the service, etc. So you can put if it's a car, you can put a maintenance task like uh, oil change or something. So it will say, okay, this month there is an oil change, um, or if it's a building, you need to clean the glasses or something. So you will plan it and you will take a report of asset maintenance and all. It's a simple thing, but I just show you because I show that tick there. So that is one thing that I want. Uh, so this is one. Okay. Now I told you that you can create asset at the time of buying something. What is the use case for that? The use case is you are buying air conditioners for the you are constructing a huge compound, okay, a huge compound, and you are finishing uh, residential compound, okay, and you are finishing flat by flat or building by building. At that time you are buying air conditioners for each one, so you just keep buying. These air conditioners are assets, but you are not going to create asset each time. You are just creating invoices because you are just creating purchase invoices. So you want these purchase invoices to be added in the asset, okay. So that's the trick. So I what actually will do, I'll go to here, item list, okay. So I'll create something like air conditioner, okay, Samsung AC, okay. So I'll just put it here. What is that? I'll just put it here. You can create the group for some of that. So here, is it fixed assets? Yes, it's fixed assets. Okay. And what is the category? I'll put it in a category. I create. No, I'm too lazy to create another one. I'll just keep it here in the transportation. Okay. And you go to here. Okay. So if there are some field, you will see is fixed assets. Okay, is fixed assets, yes. So auto create asset on purchase. So whenever you are making a purchase invoice or a purchase receipts or whatever for this air conditioner, it will automatically create one asset inside the asset one. It will not be like a normal stock, like you are selling items. It will not be like a that. It will be like uh, a purchase, I mean asset. It will automatically do that when you're purchasing. This is specifically for that. And create grouped asset. Okay, so you are purchasing 5 ACs. So it will, if you don't tick this, it will come as separate 5 AC assets, separate 5 assets. But if you are putting, I'll show you that also. So if you are putting it this one, it will be one asset. Now I'm not ticking that, so it's just like that. So I will just put it here, asset naming series, because naming series we have explained it in the past. So I'm putting that. So this is the item, okay. Now I will go back to uh no not this one. So I will go back to purchase invoice, okay, or purchase receipt, whatever. I done purchase. Um, so when you are doing it, I don't want to create another purchase receipt. I'll just putting update stock. So if you are not receiving immediately, somebody delivering into a store using a purchase receipt, you can do that. That's different procedure. You all know that. So it's just like I'm putting update stock, and I'm buying from this Sukarman Security something, and I will just put here Samsung AC, and I put 5 ACs. Okay, 5 ACs of 2000. So it's 10,000. Okay. Now taxes and all I'm not adding. So it's just like this, and I'm submitting it. Okay. So when I'm submitting it, location. So you need to add a location for that. So here on this one, you need to, because it's an asset, you need to mention where it is, where is the location. So you go here and put asset location. I have only one location. Just put it there and save and submit. Okay. So you will see here assets are created. The notification is perfect. You can see 1, 2, 3, 4, 5. 5 assets are created, and if you go to here asset list, you can see 5 AC is created here. 5 ACs. Okay, and you can do all other things. You can go inside and other things like depreciation. You can take depreciation. You can do maintenance if you want. You can put insurance details if you want, and you if you have the available for use, if you want to put something post dated, you can put it like it's only supposed to be used in January, something like that. You can do all of these things like any other asset. Okay. um, Next depreciation before use date. So very, so everything is same. It's not an okay. I'm not bothering that things. So but you can do it all. But if you are buying 5 ACs, and why you need it a separate 5 AC, so what you will do, I'm just putting it here. I'm duplicating this invoice because I don't want to enter it all again. So I'm just putting, oh sorry, uh, so I will go to item list. Okay, I go to item list. Then on Samsung AC, I will change this field from I'll just tick it here. Okay, I'll check that and then save it. So what will happen? I'm going to buy 10 ACs now. Okay, let's say 20 ACs now. So it's 40,000, and just I'm saving it and submitting it. Okay. So what happens? It's create just one asset. Just create one asset. Okay, I'll show you that asset. Where is it? Asset list. Okay. So here before 1, 2, 3, 4, 5 was there. Now 1 is okay. So if you go inside, you can see there are 20 quantity on the single one. 20 quantity on as a single asset. 20 as a single asset. Okay. So that is one thing that you can achieve if you are taking it. And I'll just do uh, things. So it's just like today. I'll show you something that you must be aware. Next depreciation. Okay. So here asset depreciation schedule created. Okay. So here one thing I will just say, here there is something called, there is a big menu, it will appear. Okay. I will explain all of you. I'll explain all of you before, but one thing I will explain now, that is split assets. Split asset means if you have multiple item on a single asset, same thing that we have done now. We have 10 ACs here. We have 10, how many ACs? quantity was done, it was somewhere here. Anyway, we know that how quantity is done. So we can, what we can do here, split asset. Okay, split quantity. You can see 4, split it. So when you split into 4, you can see it here 2. Okay. So what happens actually? Everything will change. So here it is now. It will be 6. It will be 6 AC. Oh, here. Okay. Now it will be 4 AC. Okay. It's you can see now two Samsung AC here. One is that we split and came here, and the other one was was already there. Once we split, it comes like that. So there, instead of one, it will be two, but with two serial number for the AC. Just a good time. I will tell you how to use asset report. Okay, so there is an asset ledger here. Where is that asset ledger? Sorry, asset. Okay, fixed asset ledger. So there is fixed asset ledger. There is, you can see Samsung AC. There are two. Okay, so what happens here when we bought? What was the amount that we bought? Purchase invoice. Okay, so on the purchase invoice we bought it for 40,000, right? So once we bought it for 40,000, what happens then? We split AC into 4, and eventually the other one will be 16. So if it's 4 and the one AC price is how much? 2000, right? So here you can see the Samsung AC, that is one is 8000, that is 4 ACs because we split it. Before it was 40. Before, if you look at this ledger, before we were splitting, it was 40,000 for one item, one asset group. Now it is 8,000 and 32,000. So if even if you had a depreciation, so here actually this report is a very good report. So this is a fixed asset ledger. So here you can see all the depreciation in the past also. Okay. So what happens if you are doing a splitting? The depreciation will also split. I just forgot to split it before. I mean, make a depreciation before splitting. So, but if you make a depreciation before splitting and then split, then you will see asset value is also splitting, and the depreciation is also split. Okay, so everything will split, and I'll show you something. So here the value for this one is 8,000, right? So you can see it here. The depreciation is splitting like this. Okay. For the other one, for the other one depreciation, you can see it here splitting for uh, 32,000. So it will be all 32,000 to split. So it will be like you split with the value also, the depreciation, the past depreciation also, and the future depreciation also. Everything will split. Okay. So this is one thing. So here on the, that is on split. Other things I will come before I explain something. That is, when you are creating an asset, there is a field I told you. I will come back. So this is the composite asset. Okay. A composite asset, and okay, before coming to composite asset, I will give you okay, something. Asset category. Asset category. On the asset category here, when we were doing it, we missed one checkbox here, right? Enable capital work in progress account. Okay. So what is this? You can see it here, capital work in progress account 1790. This is, I will show you here on the chart of account. On the chart of account, 1790 is, it's CWIP. Okay. This account is capital work in progress. Capital work in progress account is, it's like you are constructing a building, and you are buying a lot of things there, but it's not yet used. So you want to make it as a capital, or it's not yet asset. You cannot call it an asset, so you will just keep it as a capital work in progress asset, something like, any of the examples are, nothing comes on my mind, but this is like uh, this is the same we explained, like a furniture or something that you buy for the flat for using it later once it's completed, but not it's now. So it will be like a capital work in progress account. So when you enable this for the asset category, if you enable this capital work in progress, okay, so what will happen? This is transportation. I just added it on transportation. So it is uh, something like a vehicle you are buying for internally internal use, but it will use only after when you finish the construction of the building. So when you are making it, so let's say a asset that you are making, uh, uh, so when you are making an asset, what it should come through purchase invoice. Okay, on the purchase invoice, when you are making, I'll just put the same. I'll just put the same. So let's see. Okay, fixed assets. Fixed asset. Stock. What's location? Location. Now I'll put another amount to avoid confusion. I'll just put it like 5,000. So I'll come back to chart of account here. WIP. You can see the 6,000. What of that? Okay, this here you purchased 5,000, and you can see it here on CWIP account, this amount, fixed assets CWIP account. It's showing 6,000 because for the test I have put something 6,000 there, but it's actually 5,000. Okay, so this amount, the other 1,000 is coming from the past calculation. So don't get confused. This is the purchase invoice. It's coming for 5,000. Okay, so it is, you can see, actually it was, if it's not CWIP, it's not for the construction. So it would have gone where, here on the transportation or capital or any other, but it's just because you are making it into CWIP, it's coming it here. This amount is coming it here in the CWIP account. But I'll because sometimes you may need multiple, because you are building multiple construction sites everywhere, and you want this account to be separated, same like this electronic capital and all. So you want it separate for electronic, you want it separate for, because if you are a big company doing big construction and all, you need it in separate. So in that case, you create here a different one, like a child CWIP electronic vehicles. Okay, so we furnitures. So the furnitures you buy and keep until it is coming to 1792. So until it's coming for this, until it sets operation. This is CWIP furniture is there. Okay, so you can, so when you are making a asset category, put an asset category. So you can put here on the capital work. Okay, so you can put the other account here. Okay, so it's not showing here. Just a moment. So it should be capital. Okay, sorry. So you need to put it like this. Capital. Here you need to put it capital work in progress. Not the same one. Capital work. This should be capital work in progress account. Okay, otherwise it will not appear. Sorry for that. So here you put 2. Okay, you have now 2, so you put furniture here, so it will be like capital work in progress. So it will not go to asset, because it's very important conceptually. It's very important because when you are calculating the asset that you are actually using and the asset that you are supposed to use in the future, so you can take different report while you are doing the account. So it should be there on that. That is one very important concept that I I want to tell you now. There is something here. There are few other things that we need to discuss. That is transferring assets, scrap assets, sell assets, repair assets, split we already discussed, adjust asset value, and view general ledger. Anyway, you can see all the transaction related to this on the general ledger if you take this way. Okay, so now what you do, transfer asset is is not, there is no complication on that. You can transfer from one garage to other garage. Okay, or the custodian, there is a custodian for each. So that is uh, where at the time of creation you can put an asset under custody of any of the employees. So this is okay. Purchase invoice, existing asset owner. There is an asset owner, company or supplier or customer or something. So you can just move from, transfer from one to other. That is this transfer asset. It's just, you can, I mean, it's obvious. You don't, I don't need to explain you from one employee to other employee, one source to other source. So I'm not explaining that. There is no impact on accounts. It's just like that. So this is issue. Issue means issuing to one staff or somebody, or receive it from somebody, or transfer from one location to other, or one employee to other. It's like that. So there is no accounting impact. It's just a management thing. So I'm not going to explain that on the transfer. Scrap asset. Well, so this is, do you want to scrap this asset? Yes. So if you scrap an asset, what the impact will be? Asset scrapped by a journal. This is the journal entry that's scrapped. I'll show you that journal entry. Okay, so it is here. This is the journal entry. Okay, from, so what it actually does, so there is a transportation 1791, and there is an accumulated depreciation and the gain and loss. Scrap means you don't get anything, you just scrap it. There is no value for it. Okay, so I'll show it in the chart of account what exactly happened. 1791. Well, this is, oh no, not on the chart of account. I'll show it on the asset register. Okay, on the asset register you will see depreciation value, and so which one we have done, 32,000 value. Okay, you cannot see it anymore here because this 32,000 is gone. Okay, it's not in the asset anymore, it's scrapped. Okay, it's scrapped and it's gone from the our asset thing, so it's gone now. On the accounting impact, where is the, okay, so to transportation, we put in transportation, right? View ledger. So this 32,000 you can see it's gone from transportation. Okay, to which account? From transportation to the gain and loss account. The gain and loss account is because you there was a value for this, because 32,000 minus 17.49, that was the value, 1780. So here 1780, it's accumulated depreciation. On this accumulated depreciation, there was a value that is also cleared at the time of uh, scrapping. Okay, so you can see it here, 13.60. Okay, that's also credited. And what will happen, everything related to this asset from your balance sheet has gone, and now where it will come, it will come to the 5220, that is gain and loss. Gain and loss means 5220 gain and loss. So here all that amount will come to the, it's actually loss. I mean, you can say it's gain and loss, but it's actually loss. It came here. You can see it here on the gain and loss. So it came to it debited on gain and loss. So effectively what happens, um, effectively chart of account, on the chart of account, effectively it will come from asset to expense once you scrap it. So it's gone. The item is gone. Okay, that is, that's what happens when you scrap it. But if you are not scrapping it, because sometimes, for example, a car after 5 years of depreciation, that doesn't mean it's zero value. Somebody will buy it for 5,000. Okay, so you don't need to scrap it. So what you can do on the asset side, for example, this Nissan Petrol is partially depreciated, you can just say sell the asset. Okay, uh, the car is with you, the depreciation is going on or finished, or so still you can, there is a value for that, you can sell it. Once you sell it, once you are selling it, what it do, mhm, I put something here on Nissan Petrol. The value I'm getting here is, let's say, 4,500. I get that value. So once I get that value, I'll just set here, okay, and submit that. Okay, I submitted that sales invoice. Okay, now this you can see here on the top, salt. Okay, so once it's sold, this asset also gone from, where is asset, fixed asset register. On the fixed asset register, you will not see that Nissan Patrol anymore, it's gone. Okay, so it will not be here anymore. And you can see here, you can see the, but not here, maybe a short. on the chart of account, it again come to gain and loss. This gain and loss, you can see that gain and loss account. No. Let me try to find it at that moment. This is asset. There is a okay, sales invoice. Here, this is actually the place that once you sold it, it's coming here actually. So on the transportation, once you sold, it comes 25,000. That was the original value. It's deducted, and 4,500 that you will collect from the customer later. Okay, and the gain and loss. So this is where we had confusion. Actually, on the gain and loss, what will happen? The the total amount on the balance sheet minus the depreciation amount, that amount will go to 5220. Okay, so I'll show you on the 5220 gain and loss account on the ledger. On the ledger, it is okay. So looking at the accounts 2486, how it's come, because we bought the vehicle for 25,000. Then there was a depreciation, and we sold it for 4,500. So the depreciation, what is that? Because I didn't notice at the time of the depreciation. So that depreciation, so it was like this. I should have noticed the depreciation, but we can do it again. So we bought it for 25,000, and there was a depreciation, and we sold it for 4,500. Okay, so there is we got, I mean, this entry is 2486. Okay, the difference is the depreciation that happened during before selling actually. So that depreciation will be adjusted here on the gain and loss. So the total amount will come on the gain and loss. If it's confused, maybe you can buy something and do a depreciation, then sell it. So it will come properly on here. Okay, so maybe that's sell of property. I'll go back to asset list, and this is now okay. Now you can see multiple categories here: sold one, scrapped one, submitted one. This is partially depreciated. Okay, now we have done like, so we need to take this one. Okay, So here there is, we did scrap. Scrap is actually, it will be, there is no sales in, okay, I'll just summarize it. There is no sales invoice required for that. The entire difference will come on gain and loss. Okay, the all difference will come on gain and loss if you are doing I mean the total amount minus depreciation will go to gain and loss, and it will go out of fixed asset register. So that will happen at this time of scrap. And sell, you need to have an invoice, a sales invoice, and same like that. The difference of the sales invoice amount, um, I mean, from the original amount, original purchase amount minus the sales invoice amount minus the depreciation amount, that will go to gain and loss account. So again, it will go from this account to, I mean, it will go from fixed asset register. So that's that thing. So this transfer asset we covered, scrap asset we covered, sell asset we covered. Now repair asset. Don't think something. So it will be like repair it on some day. Accounting, there is a purchase invoice, because if you are purchasing something for the repair of this particular item, so it will add. So it will be like, I want today's item. Okay, repair cost. So this is, which item is this? Oh, it's all confusing. I just put one new item here, otherwise we'll mess it up. Okay, anyway, it came here out of order. So what will happen, so we have a asset repair here. So you can see here there is an asset repair. So when you do this, you can see we have done a, we added an invoice here, that is 39,000. It's actually, it's more than original one. So first let me check what is the original price for this. That, which asset is this? This is the asset number. I'll just take it, fixed asset register. So this register we have, this is the 8,000 is the original value. Okay, now I'll go back again to fixed asset register and I will just submit it. Okay, I will please update repair status. Repair status has to be completed, because otherwise accounting will not match. So it should be completed in this case. So I will just save it and submit it. Okay, so what happens here? What happens here? So here, uh, just refresh it. Transportation. So there is a general, not done yet. We forgot to capitalize the repair cost. 1 minute. I'll do another repair on that because I forgot to capitalize on that. Okay, so just this one. Again, I will make another repair. Tailor date, I put same date. Then new asset repair. Asset repair. 2000, an invoice of 2000, and I put here. Now capitalize. Okay, I'll explain that point. So this is just uh, I'll explain these things, but first let me capitalize and show you the value difference that it is coming. Okay. After that, I will go back to the another submit. So here there is an 8,000. And on general ledger, on what you can see here from the transportation, it's debited 2000. Okay, and the account receivable, it came from account receivable because it's we bought on a sales invoice. So it will come on transportation. I will show you here on the chart of account. Things getting complicated. Chart of account. Okay, on chart of account you can see now on the transportation there is an entry came just now, that is 2000. Okay, so they added one entry, that is asset repair, and this repaired asset, for let's say you bought something for car, and that value, it's a value addition, so it will come here. Okay, so that's what it it is. I mean, so here column, it's not, so it will be there in the general ledger, that is 2000. Okay, so this one, it's if we put capitalization, capitalize repair cost at that time, that will come. I mean, on the first case we didn't put the capitalize, so it didn't come anywhere. For example, you just bought tire for a car, you don't need to capitalize it. But if you bought an AC for the car, maybe you need to capitalize it. So it's your decision. So on the first case we didn't capitalize, so there was no related general ledger entries. Now once you capitalize, it is there. Okay. Now uh, then there is something called stock capitalized. So I'll make another one here. I'll make another repair here. Okay. So there is something called it. So here capitalize, you saw it already. Okay, and here when you capitalize it, it's another repair. Okay, 5,000. When you capitalize it, you need to increase, if you want to increase the asset life, you can put it here. Asset life means, for example, you had a car or something, you made lot of investment on top of that, and you expect it will be another 12 months it will serve you. So you can add that value into this. Okay, so this that is one option. And stock consumed during, this is something that's important, because uh, if you have a store, I mean, if you have a workshop and if you have a store, and you take car to the workshop and you take something from store, for example you take a tire from store or brake pad from the store, so you can just take it from there. So what it will do, it will uh, on the your stock item will be credited, and this is your asset will be debited. So that way you can do it here. I'm not showing it here because we don't have that much time to show all the features, but that is for the stock consumed during repair. Okay, so that's one important aspect. Then asset depreciation, increase in assets. Okay, increase in asset and the description. So these are the 4 points. uh, one, when you are doing asset repair, you can add the life if you want, life how many, and depreciation will be adjusted according that, and repair cost will be added to the that. Okay, so if you want to take some items like tire and all, you can put it from stock. Okay, so you can either capitalize or don't capitalize the repair cost. That's up to you, because sometimes it's just a repair, not an added value. Sometimes you can capitalize it in store consumed, and this screen is pretty done. Okay, and once you completed only, it will be accounted. So on the pending and on the cancelled, it will not be accounted. So once it's completed, it will be accounted. Okay, so that's the case. Then now we go to uh, now we go to we have done split asset, split asset, we have done repair asset. So now adjust the value. Okay, that's the last thing here. Adjust value. Okay, we okay, now on the new asset value. Okay, so this is, I mean, as simple as that. So I'll just new asset value, I have that single here. So if I want to add, some value for that, adjust asset value. Okay, adjust asset value, what it will do, today you have added something. You This current asset value is 10,000. Okay, so you want a new asset value for this, just copying it. Okay, on the fixed asset, I'll just check it, what is it there, 10,000. Okay, it's 10,000, and the new value I will put it here, 14,000. Okay, so what it will happen, if you save it, you can see the difference amount is 4,000. So how you add this value, it's up to you. Okay, uh, maybe you bought some item for it or something like that, or you just found that there is an added value for that, but normally it will come down only. But anyway, it will go to gain and loss. It's here. Okay, now we have done that on the now new asset value. So it will be, there is a journal entry. Okay, and this journal entry, on the accumulated depreciation, it will go to 5203. On the chart of account, you can see something here on the expense. Okay, so here 5203 is, there is an account called depreciation here. In this account, actually, if you want, this is all the depreciation coming here, but you can see you just added this value, it's coming on the opposite side. It's coming on the opposite side. That is, now we have done 4,000, right? 4,000. Okay, so this 4,000, you can see it's coming on the credit side. Of this, I mean, these are all depreciations that we have done, and this is an added value. So you can see on the credit side. Sorry. Yeah, I just showed you. This is all we have. This all the depreciation we have done, and this one is the added value. So it is going from a depreciation account. You can assign for other account, but this is actually what normally people do. I'll show you. This is so this is the ledger. So from accumulated depreciation, this value going to depreciation. That is, from accumulated depreciation, it's credited and the depreciation is limited. But this is not a normal scenario. Normal scenario will be on the asset value adjustment. On the asset value, adjust asset value, it normally don't go higher value because it will be like now it is 14,000. I will deduct it into something like 6,000. That value I reduced. Okay, value I reduced. Okay, and I submit on the chart of account. You can see on the indirect expense depreciation. You can see the 8,000 come on this side. Before it was 4,000 this side, and this is on this side. Actually, this is a depreciation, actual depreciation, because we reduced the amount on the asset value. This is because we added value. Normally, you don't add value. So this is coming on the depreciation side. Okay, and this, if you take this ledger, and the other side is accumulated depreciation 1780. Okay, 1780. This is the other side of the ledger. So it will be like we put, I mean, uh, on the asset part on your balance sheet, it's either added like 4,000 before or 8,000 now. I mean, it's either added or subtract according to what value you have adjusted. So it will reflect on the balance sheet and on uh, expense. I mean, the profit and loss. It's like that. So it will be down from balance sheet and it will go the it's like that. So now what we have not covered, just about louder, asset asset we covered. Okay, I got what I was missing. That's asset capitalization. Okay, so there is a concept called composite asset. I'll just go to here, create one asset, add asset. So when I'm doing it here, there is something called is composite asset. Okay, so this is something that I told you in the beginning, that at the end I will cover it. So this is composite asset means it's you build something, buying different things, build something, and then make it as an asset. A use case is like a truck. Okay, I'll just put a truck. So if you go to images, okay, this truck. Okay, so this truck, you can see here there is a container, and here there is a front part of it. So it will be like you buy different things, even the tire you buy separately, and you take a manpower resource and build this and put all together as an asset value. Okay, so everything will be like an asset value. So what will happen here? What will happen? So now you make an asset like a heavy truck. Okay, and create an item. So it's like I'll put a heavy truck, a fixed asset, and it's under transportation, and save. This is the item, and I put it's a composite asset. So it's a composite asset. Put other things like you used to do, put the location and everything. And so once you have this doesn't have any other options. You see here, there is no other options like scrap, sell, repair. Nothing is there. You have only one option left here, that is to capitalize it. So when you are going to capitalize it, this is work in progress. I mean, there are two type of capitalization. One is work in progress, we discussed before, and the other one is choose a new composite asset. Okay, so I'll just, you can choose any of it, and the target one is heavy truck, and the location is this. So what you will do here, there are stock item, consumed item, and service expense. So stock item means that's something that you take from your store, not from the asset. So you just take from your store something like this. You take three of it, okay, and there is from the warehouse. So I take three items from a warehouse. That may be if you have a store, you take tire or something, you will take from there. And you take consumed item assets. So some consumed assets that you take to make this. I mean, like a container or a front part or something. And there will be service expense that you need to add because you need manpower, you need some other service to get crane or something, or bring the container from other sources. You need to add it, all of it. You will add all of this and make it as a one single unit. So that single unit, there will be a value for that. So you can see that you have created an asset. This is the asset. Okay. So this asset, what it will have all other things like depreciation. You can do you can calculate depreciation. You can do everything, maintenance, insurance, everything on that. This one. So this is once you do this, next depreciation date. The purchase date. Yeah, the same like this. Uh, and debit. So you have a depreciation schedule also you will get for that composite amount. That all together that composite amount you will have it here. So it's same like that, and you just submit it. So it will be like any other asset register. If you go to asset register, okay, then you will have that composite item also here. Okay, so that is pretty much we have done. So now do we need to do something? Okay, so if you find from the comments that we have received, 2 points I want to add now. One is you don't always need an item to make an asset. I mean, you don't need for each asset, you don't need to make one item. So it's like if you already have an item like shoe rack, so every time you are bringing a shoe rack, you don't need to create another asset. So it will be like, so you can put another shoe asset and put the purchase details. For example, you put whatever amount and available for use date and purchase amount and the purchase date, whatever, and you can just post it. So that's one thing I want to put here, that again you don't need to create item for item each time, that when you are creating an asset you can use the same item. So it will, that is one thing. The second thing that I want to make clarify here, uh, when you are making an asset and calculate depreciation, so in the depreciation, many of the companies here using monthly depreciation. So if you are making monthly depreciation, this one is actually yearly depreciation. So 5 years and I mean 12 frequencies. So it's like this frequency is month. So 12 means every 12 months. So that's every 1 year. This will make it, and total number of depreciation is 5. So every 12 month 5 depreciation, that is 60 month or 5 years. So if you want monthly calculation, so what you do here, put 60 here and 1 here. That is basically what it says. Put 60 depreciation, that is 60 months. 60 months means 5 years, 12 into 5. And a frequency you can put 1. What will happen? So it will consider all 5 years as 1 and put 60 months depreciation. I will show you how it will come. Okay. Okay, so here I put it like this. So what will happen? Check the depreciation schedule. So it will be like every month, 10, 11, 12, 13. I mean, 1 again. Then it's every end of every month, it will make a depreciation calculation up to 60. That 60 means 2029. 2029 is 5 years from today. Okay, so that way monthly calculation can be done. So I just wanted to clarify this point as I received on the chat. um, Thanks for joining, appreciate that. You can comment on it, or you can send us email at support at erpgulf.com. So we'll send you the reply if you need any clarity on that. Thanks very much for joining, appreciate that.